Okay, perfect. Well, I'm gonna let these folks in and we can rock and roll, man.
Yeah, man.
Hmm. Testing, testing, one, two. Let me screen up. Yo, 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 what is up? Dempsey, my man, what's up? Brian Malone, Dr. Balgatch in the building.
What's going
What
on,
is
man?
up, everybody? I see Charles, Randy. Let's see, Joseph. Let me make sure I didn't miss anybody. There was some more people in the waiting room. I'm super excited about this one. I am a student myself, so I'm always looking to learn something that I don't know, because what you don't know is costing you money, right? And if that's one thing that I'm always learning, is because my goal is to always make people who partner with me more money. And so I'm looking for experts, right? Specialists, experts hire specialists. So the whole purpose of this call is the education process. There's no pitch at the end of this. I'm not selling anything. It's to give you guys some information so that you all can be made aware of what is possible so that you can go to another level. How many people want to make more money than what they're making right now without having to do more work? Right. So if so the difference between that and what you're doing right now is you just need some more information in your hands. And so um, I used to work maybe a couple offices down from Ryan. We were trying to figure some stuff out in February. Um, it wasn't working. I was like, damn it. I got in the lab. I'm like, okay, let me learn a little bit more about this. So I started educating myself a little bit more, asking some more questions, did some tweaks. Ryan will tell you about the results of that. I'm like, all right, Ryan. So now that I figured out my piece, I need you to share more of with the people that I know, what it is that you're doing and how this works, so that people can kind of level up, right? So we're in that season. So without further ado, I'll let Ryan take the floor and introduce himself. But I just wanted to kind of set the frame for you guys. So make sure you guys are ready to rock and paying attention. This is going to be awesome.
Yeah, man. I appreciate Arturo having me on. So a big thing, guys, for me is I've been in this space for 16 years. I've only specialized in annuities and indexed annuities. I don't do anything else. So I don't do, IULs, I don't do life insurance, I don't do Medicare, I just do annuities. And so the biggest thing right now, I'm going to go over a decent amount, but I'm going to show you my presentation. So in here, I got a 21 slide presentation. I'm not going to go over everything in super detail, but I'm going to give you it. This is what I do with my clients real time, and how I'm converting. We're on track to do north of 40 million this year with our annuity business. And it's right now is just a really good time, guys. Like, and I'll make this a little interactive. And if you guys have questions, feel free to stop. But one of the big things that we have going for us right now is rates have been higher in the past, but rates have never gotten this high this fast, right? And we're going to talk about what's happening in our economy to make annuities so relevant, where banks are offering them, all the advisors on the planet are starting to offer them. Insurance agents are now saying, okay, I need to be doing this, because one step is, all right, annuities are a great fit for the client, and I'm going to show you an example of how I just had a client. We did a review on the beginning of this week. Client made 12 and 28% in an annuity. I'm going to show you their statement. And then the other part is, what can it do for you financially, right? And so if you are doing health, or if you're doing life and you are looking to cross sell into annuities or help your clients with annuities, the average annuity commission average is 6%. So on every $1 million you write, it's 60 grand. Our agency's, writing right around 3 million a month. And so you can do the math on the amount of commission that's coming in from that. Now, one big thing is, where do you find people, right? You have to obviously buy leads, unless you're going to work your book of business or partner with agents. So we're going to talk about all of that as we go through. But first, this is what I want to do. I do this with my clients. I want to do this with you guys. My goal is to leave you better than I found you. I obviously have no, working relationship or no, financial gain by getting on here. I just want to make sure you guys are educated. So when you're working with your clients, you can give them what I'm going to give you. And hopefully just this slide presentation helps you make another $100,000 a year. And again, I'll open my chat. As we're going through this, feel free to throw questions in the chat. And guys, I'm just going to strictly walk through my presentation so you guys have it. And then at the end of this, if you guys want it, If you send me a text that you want the presentation, I'll send it to you. And I'm going to throw my number in here as well, so you guys can reach out if you need it. All right, so I'm going to share my screen. I got multiple monitors, so bear with me. And guys, let me know, are you guys able to see that all right? Good, good, good. All right, so this here is what I run. I have an office in the Greatness Factory in Nashville, and we get access to the auditorium once a month. And so I funnel people into the auditorium that holds 109, and I give this presentation. So I coined this Becoming Financially Unshakable with Ryan Shkreli. My company is the Safe Investing Expert. I go over the agenda, which we're just going to kind of bypass that right now, guys, because I want to, make sure your time is relevant, but have an agenda for your clients. So here's a big one, all right? More banks have failed in 2023, in the year 2023, than in all of 2008 to 2010. Why did that happen, right? What caused those banks to fail? Now, if we look on what banks failed, we had Silicon Valley, which was a big one. We had Czech, PacWest, and we know when PacWest failed that Bank of America gave them $30 billion to try to bail them out, right? So why are all these banks failing? What's going on with it? And it starts from COVID. So I know we're going to backtrack a little bit, but it all started with COVID and the effects of COVID and what our government did. And guys, just so you understand where kind of my mindset is, we're in probably ripple 9 of 12 of the effects of COVID and what it did. So leading up to COVID, there's a couple things you have to know. One, every year, like clockwork, we have a correction in our market. We always have one that's typically in the fourth quarter. Two, every 7 to 10 years, we have a downturn in our economy. So let's talk about that for a second. 2008 to 2010, obviously was the mortgage crisis. 01, the dot-com crisis. 1987, Black Monday. So those are the last three. You can go back every 7 to 10 years and you're going to have downturns. We knew something was coming because in June of 2019 was a world record month. And what that was, guys, is it was the longest running bull market in US economy. And so June, July, August, September, we're just breaking records. And so we knew that what goes up must come down. So we started looking at what's going on in the industry. Well, the first one we saw right away was car repos were through the roof. People were delinquent on their cars. So maybe we'll start watching that sector. What no one could have predicted, guys, was March of 2020, COVID, right? And the massive effects of COVID and what happened when the shutdowns were announced, the market free fell. Government shut down the market multiple times during that week, middle of the day. They just shut the market off. So that way, no more free fall was happening. The government had to take action, right? So, they stepped in, whether you're Republican or Democrat, you should be able to agree that the government had to do something. And so during the COVID, the government gave huge stimulus packages. Federal Reserve, 4.7 trillion, legislative, 5.88 trillion, and administrative, $875 billion spent in stimulus packages. So guys, when you go and you push that much money into an economy, naturally, what you have to be ready for is inflation, right? And so now we're hedging inflation, trying to stay in front of inflation. This is right off, everything I used is all factual, guys. So this is all off of FDIC. And so I think that's really important, or Fed.gov. So natural progression went 2021, inflation 4.7, 2022, 8, 2023, 6.4. That is from FDIC. So what I'm going to tell you is if the FDIC is telling you that inflation is at 6.4, guys, it's higher. It is definitely higher because they don't want to create panic in the market. So if you look at any financial genius out there, look at Warren Buffett, look at Ray Dalio's, they're saying inflation is hedging more towards 7 to 8%. Now, we just know we just saw CPI reports come out. So if you guys don't know what CPI reports are, they hedge inflation. It tells you what inflation's looking like. They're up again, right? They've been up every single quarter. The Fed is actually meeting right now and hopes to drop their very first rate cut. But we have rising interest rates. So what happens, guys, is just to give you a good understanding, when the government issues all that money, inflation happens naturally. Then when inflation starts happening, the government passed something called an Inflation Reduction Act, which allowed the federal government to raise rates to hedge inflation. Now, what's important is prior to this, the government needed money. And so they went to banks and they said, hey, we need a lot of money. We're going to sell you 10-year treasury bonds, 20-year treasury bonds, 30-year bonds. We're going to sell you them. Rates haven't changed in 3 decades. They haven't gone up. We've been in a stable rate environment. Everything's been good. We're not going to raise rates. we get all these banks and bonds. And what does the government do? The federal government raises rates 11 times from 2022 to July 2023. 11 times. And they haven't done that in many years. And so what it's done is it has put a ton of these banks in a tremendous amount of financial pressure. So that's why we're seeing banks collapse. That's why we're starting to see this domino effect. Silicon Valley, $109 billion. Check, $229 billion. Signature, $110 billion. PacWest, JP Morgan gave PacWest $30 million to try to save them. They fell. They're falling because of the interest rates, or excuse me, because the Fed rates are going high. And so that's just like one ticker that's happening right now. Now, here's the win for you guys. Because rates are high, because the government has raised rates 11 times in the last 2 years, these indexed annuities are phenomenal. They're absolutely amazing for your clients because look at MIGAs, right? Multi-year guarantees. We were getting 6.5 guaranteed for 5 years. That's like to give your client 6.5% guaranteed for 5 years. They're pumped for that. They're like, man, I don't need to risk my money in the market. I can get a guarantee on here. Indexed annuities right now. My clients are averaging 8% a year, 8% per year. I'm going to show you guys some other ones. So what's coming down the pipeline? So we know rates are high. We know the government is talking about our first Fed cut right now as we speak. They're probably going to announce today whether they do a Fed cut or not. And what's currently unfolding? We have $2 trillion in commercial real estate refinance. It's the biggest refinance we've ever had between 24 and 25. So roughly 20% of all commercial real estate needs to be refinanced between the end of this year and next year. So that's a big deal because when these banks are going to refinance, you got to think these business owners are going from 2% and 3% to 7% and 8%. So guys, when they're refinancing, they're large chunks of money with high interest rates. Now they have to think about, okay, how am I going to afford that? Another thing that just happened is commercial real estate is no longer a grade A asset. So we have 29% or 28% non-occupancy rate. That is directly affected from COVID. That's saying people are now working from home. They're not working in offices right now. And so 28% non-occupancy rate. Commercial real estate downgraded from an A rating. They're now a B plus rating. Another huge one, guys. Goldman Sachs predicts 5,000 jobs a month in 2024 and 10,000 jobs a month in 2025 directly from the commercial real estate refinance. So guys, this is all factual stuff you could be giving your clients because you want to get them safe from volatility in the market. There's stuff coming down the pipeline. Will it shake our economy? Yes. Will it have less of an impact than what some people are saying? It could, meaning it might not be as bad as what some financial analysts are saying. However, do you want to gamble with your client's money, right? You would rather get them safe where they can make a good return instead of have them stay in the market, go with the ups and downs, and lose their retirement. First one that fell, December of 2023, the collapse of WeWork. So if you guys know what WeWork was, $47 billion company. They just filed bankruptcy, and it's all because of what's happening in the commercial real estate space, guys. People are working from home, huge decrease in occupancy. Credit card usage, we're at an all-time high. 2023 hit a huge high. Fourth quarter of 23 increased 5% alone, giving us $1.1 trillion in credit card debt. Another part of this, and I might hit it here, right here, a 3-decade low in savings. So we're at an all-time high in credit card debt. We're at a 3-decade low in savings where people are saving their money. More concerns about FDIC. FDIC has announced, because of the banks failing, they now only hold 1% of all insured assets. That should blow your mind, guys. They hold 1% of all insured assets. So if multiple banks go down, FDIC has already said, we're going to help the bigger ones. The smaller ones are going to be on a waiting list. And you can look all this up. So you might say, Ryan, all right, you're telling us all this concerning stuff about the market. What are we supposed to do to help our clients? And so this is what I do, guys. This is my presentation. What we follow is something called the rule of 100. Warren Buffett uses this rule. He preaches this rule. This is a very simple rule. And all it is your client takes their age divided by 100, and that's how much money they should have safe from non-market risk investments. So let me give you an example. 60 years old, got $100,000. 60% of that money should be safe in non-market risk investments. The other 40,000 could be at risk. They can be in a money market. They could be in stocks, bonds, mutual funds. They can do whatever they want. I see some questions pop in. I can't see it with my screen, so bear with me a moment. Now, on a bigger scale, let's say someone has $1 million, right? 60% of that should be safe, non-market risk investments. The other 40%, you can be a little more aggressive with. The idea is, as you get older, more of your assets are protected. So what are safe investments? Because they're not just annuities, right? Like, as a fiduciary responsibility, I can't just say, keep 60% of your money safe and annuities are the only answer. So what are safe kinds of investments? Obviously, annuity, guys. Annuities are insurance backed. Not only are they insurance backed, they've been around for a long time. They're really good. Real estate, hard assets, CDs, bonds are not guaranteed, but they're very safe, right? So if you see, a broker trying to get their client safe, you'll see more bonds. And then art is actually really trending right now. Art's up quite a bit. And so, it's not for your everyday mom and pop, obviously. But if you're looking for safe investments, here are some really good safe investments that you don't have to worry about the market volatility. Now, I specialize in index-linked strategies. So, if you're looking for real estate, or if you're looking for art, there's other people out there. But what I specialize in is the annuity space of it. So I'm just going to give you the guarantees, right? Guarantee no loss, compounding interest, average return is 7 to 10%. Right now, my clients, we're seeing a return of 8% as our average with each client. Low or no fees. All right, that's huge. And so what I do, guys, I just show them this graph. This is a very simple graph. Nothing, overselling here. For you guys that are in the space, this is on old participation rates. So low par rates. So real quick, we'll just walk through it. Gold line is index annuity. Green line is the S&P. You put 100 grand in. And in 2000, when the .com bubble happened, your money in the market was at 151. The money in the annuity was at 124. That money just levels off. You don't lose anything, right? And the market goes down. Mrs. Jones wanted to retire. Now she's like, the .com bubble really threw me off. And so she doesn't retire in 2002. And so the client that's in the annuity just levels off, and they start coming back as the market rises. Now, let's say Mrs. Jones is going to retire in 2009. She recovered from the .com bubble, and bam, now we have the mortgage crisis. All right, and the mortgage crisis hits. Mrs. Jones is back down to 93,000 because she's volatile within the market. Where if she would have been in an indexed annuity, she just simply would have leveled off. You're not going to make the full gains in the market, but you're not going to lose during the down times. Now, here's what's beautiful. Compounding interest. Every year on the anniversary date, we lock in the rate of return. So from 2007, Mrs. Jones went from 159 to 162. When the market went down because of the '08 bubble, Miss Jones just leveled off, right? She didn't lose anything. Now we know the market rallied, came back, but at the end of a 20-year period, Mrs. Jones in an index annuity would have ended at 287, and Mrs. Jones in the market would have ended at 257, a difference of $30,000. So, guys, for your folks in retirement, that's a big deal, right? That's a real big deal. And two, that's a lot of up and down. It's a lot of stress. So let me look. Give me 1 second here. I'm gonna check this chat. Oh,
Yeah,
oh,
I told him to just put the questions in the general chat, and I'll make sure you get to them at the end. I'll keep track of it, and we'll just run through it.
yeah. Beautiful, beautiful. That way,
Yeah, just keep going, man. Just drop y'all's questions. If y'all have sent it to him
dude.
already, just drop it. Rick, just copy and paste it in the group, and we'll make sure we knock it at the end.
Yeah. And I know I'm blowing through this. This is a ton of info for you guys at once, but I want it to be valuable for you. And so, again, the biggest thing that I hit on this, guys, is these are par rates from 98 to 2018. And the massive difference in par rates is we never had an uptick in the federal government raising rates like we have had recently. And so I'm going to pass this just for a second. Rates are at an all-time high. Bonuses are high. Right now, participation rates in 2018 we're at 34%. Right now, in 2024, the average participation rate, uncapped, no cap, 70% participation. That's huge. That's double the amount of growth that clients had back when this was compliant. This is still compliant, but my compliance company won't allow me to make a new graph on the new pars. You know why? Because that graph would go off to the moon, man. And so we're not compliantly showing clients that because it's too new, but just know that it's there. It's real, right? Benefits of an index strategy, no market risk. I do this to be real conservative. Industry average 6 to 8% return. Guaranteed growth or income and death benefit options. Compounding interest, tax deferral. Guys, annuities grow tax deferred, meaning your clients don't have to pay taxes until they start taking money out. No advisor fees. Now, there can be product fees. I use a product all the time, Athene Performance Elite Plus 10. I use the liquidity rider. It's 0.95%. My clients really like that rider. So I do use a fee-based product, but there's ones out there without it. Premium bonus. Companies out there right now, again, Athene offering a 14% premium bonus to move your money. Client has 100,000, they get 114 grand day one just for moving their money. I'm doing a lot of advertising right now on rolling your old 401k to an IRA and getting a 14% bonus just for moving it into an IRA. We're having a tremendous amount of success on that. Long-term care benefits, probate avoidance, and wealth transfer. Again, this is what we just talked about. Rates are at par rates are at an all-time high. And so this is what I show my clients. And obviously, I'm like, if you guys are interested, give us a call, and we'll be happy to go over it with you. So I'm going to stop sharing for a second. A lot of info in that presentation. I'll send that presentation to you guys. But just know that right now is a really good time to be engaging with your clients. Right now, we have the annual election period. You know, if you guys are in health insurance at all, people are programmed to sit down and review their stuff right now. Like we write 30 plus million a year in annuities. We write about 15 million all the way up to October, and then we write another 15 to 20 million in, you know, a month and a half, because people are just programmed to sitting down, talking about this. And you know, once you do this on an emotional level, does it make sense? Yeah, but you don't want to sell on emotion, right? I don't like selling. So I have a training guys, it's called Moving Millions in Minutes. It's a training I put together over the last 3 years for annuity agents or people wanting to learn annuities. One of the big core concepts in my training is value is the new close. I don't ever want to sell anybody. I don't ever want to create panic. I don't ever want them to buy on emotion. I want them to understand where we're at in the economy, not only understand it, but have a really good understanding that like the unknown is kind of out there, never too high, never too low. But I want to give them enough education where they can say, okay, a portion of my assets should be safe from non-market risk. And then another big thing is compliance and suitability, right? So hypothetically, if Mrs. Jones has 200,000 and she only has 200,000 and there's no money anywhere else, compliantly, you can't move all that 200,000, right? And so that's all in there as well. So why don't we go through and jump through some questions? Arturo, let's see if there's some in here I could answer for you guys.
Yeah, so all of them didn't come through from them posting them directly to you. So I would just while you get set, I'll just start with what I got right here. So
Yeah, go ahead.
it says, with all the ups and downs over the last 5 years, are you running into any issues coming up with a surrender period on these annuities because people are trying to cover increasing costs of living?
Oh, well, surrender period. So I guess if you want to ask me that question, I don't understand it from.
Dempsey.
Yeah, if
Yeah.
you want to just jump on and ask me, I'll be happy to answer it.
Yeah, from my understanding, a lot of these annuities have a surrender period, like a 5 or 7 year, to where there's
Yep,
fees if you're withdrawing money before you annuitize.
yep.
Um, with the increasing cost of living over the last couple of years, are you seeing people are trying to tap into this annuity to withdraw instead of like annuitizing and facing any sort of um, fees for withdrawing that money at all?
Yeah, so good question. I understand it better now. So the answer is yeah, people are accessing their money, but this is where doing your due diligence on what annuities are out there, right? Because not all annuities are good annuities. And so I use Athene Performance Elite Plus 10 because of they have a liquidity rider. And so you pay 0.95 for a liquidity rider. And what that allows you to do is it allows you to have 10% access from day one, meaning like you move your money and tomorrow you can take out 10%. If you don't use it, so it's 10% day one and thereafter. If you don't use that 10%, year two, it turns into 20%. And so now if you have a client that has $200,000 in year two, they can access up to 40 grand, which is really good. And then the other part is, and we could get into this on another training, or, if you guys inquire on our Moving Millions in Minutes training, it's in there. But we utilize the 3 bucket strategy. And so that 3 bucket strategy is liquidity, safe or growth and safety, right? So you always should have 3 buckets you're kind of juggling from. We never want to be in a point where I've been doing this 16 years. I have only had one client ever pay a surrender penalty. And in that surrender penalty, they offset their penalty a lot by the interest they made, right? So, but yeah, people do access it. I encourage you to, understand what your client's needs are and to understand the policy, because here's another, just a quick thing. I work with hundreds of products. I've only plugged Athene because I like their one product right now. They have another product called the Athene Performance Elite, not plus, no liquidity like the first or second year. So, there's big differences in products. And so you really have to be educated on what you're offering. But yeah, people are accessing their annuities and they're using the money. And if you do it the correct way, your client should never have to pay a fee to access their money. So I hope that answers your question. Okay, what do we got here? So typically, what is the allowable premium for an annuity? How do they calculate? So you want to ask, like, are you just asking how much should they put into an annuity out of their estate? Is that what you're asking?
Yes, because I called Athene's like their service department customer suitability. I had to go through reconsideration, and I had a client and they said so she had 135,000, but then they said that they would only, since it's all of it, how like you're saying, but she had 30,000 in another non-liquid account.
Okay.
So she didn't have reserves, I guess. So what's the allowable amount? Is it 70% or is it like, how did they calculate that?
Yeah, so
If I'm looking at total assets, not including the mortgage.
Yeah, so each carrier is going to calculate it differently. With Athene specifically, what I like is when you go through their suitability page, it will actually red flag it for you if they don't like something. It will say, hey, 70% of this client's net worth is going to an annuity. We don't like that. And so what you can do, what I've done, and I do this quite often, I just had a gentleman in Wisconsin. He had 150,000. That's all he had. He had no other money whatsoever. He didn't have money in checking, didn't have money in savings, and he had an IRA, right? And so he was like, Ryan, I want an annuity. So like he knew what he wanted. We wrote him with a theme. But suitability wouldn't allow us to put all his money in there because it's not suitable. And so what we did is we opened an IRA checking account at his bank. And so he transferred 30,000 into the IRA checking and 15,000 into an IRA money market account. And then we moved 100,000 to Athene. And so it's a non-taxable event. So he can still access money, but they're both liquid accounts. And so we took a little bit of hit, obviously, on commission, but it's the right thing for the client. And so if you have questions, feel free to get a hold of me. I'll help you walk through what a good, compliant, suitable thing looks like. Because with Athene, and I love them, and I'm on their summit team, which just means I'm one of their top producers in the country. Once you red flag suitability, they are a pain in the ass to get around. And so, once that thing's red flag. So what I do is, all of our agents, we have a lot of agents we work with. We do, if compliance looks questionable, we'll walk through the application, talk with them, and then maybe even come up with another plan to repropose to the client. So, and then what we do is, like, let's say, for instance, your client says, why are we changing our plan now? You could just say, I worked with a gentleman, independent fiduciary named Ryan Kelly. He pointed out a couple things that might be better for your scenario. And so this is what a more compliant plan looks like, or a better set plan. So
that's what I had proposed to her, was like, let's break it down. Like, I agree with you. I was sitting there thinking, like, maybe we should just see what the allowable amount that thing will allow, maximum, whatever's left over, we could take the rest and put in an annuity, maybe even, because it's only going to be like, I was thinking the way I calculate, maybe a difference of like 15,000, right? So maybe we could just pay a little tax on that, dump it into our IUL, or like, I was trying to figure out how to pivot. And I even was thinking, like, okay, maybe even look into another carrier, because I'm with the FFL and they told me to submit it through SRS. And then they made a recommendation. They said, if you have problems with the theme, go to National Life Group. They're usually a little bit better. But I don't know. Have you sold anything with NLG?
Yeah. We sell all sorts of products. I'm very familiar with them. The biggest thing I can say, and I'd be happy to have a conversation outside of this Zoom. The biggest thing I would say is, with respect, is like, don't get too cute with suitability, right? So the idea of, maybe having liquid funds in another IUL product, well, that IUL, that might not be the right move, right? So I got to understand a little more about the client, what their goals are. But there's a way that we can put something together that's compliant for your client. And NLG is a good company, but I do believe if you're going to sacrifice a little bit of suitability for NLG, Athene is a better product for the client. So there's a couple things.
That's what she asked, right? Because I was like, oh, well, worst case, because we're in reconsideration right now with suitability. That's how far we are in this one.
Yeah.
But if I submitted everything, we made the corrections that they asked, I'm hoping that they're gonna consider approve it and let us know. But then I was talking to her, I said, worst case, maybe another option could be NLG. And she was like, well, what's the difference? So
well, and that's where you got to look at, due diligence on the company, what their ratings are, how long they've been around. But then the bigger thing is rate integrity, right? Athene has really high rate integrity. And so I can tell you that in the history of Athene, they've never swayed more than 20 basis points either way in the history of Athene. And so does NLG have that rate integrity? And then also, what are the current par rates? What are the caps? And so those things, on a due diligence level may mean hundreds of thousands of dollars for your clients over time.
Okay.
For sure.
So,
thank you. I'd love to get your contact info too.
Yeah. I think he dropped it in the chat. I'll let him drop it again. I think, and then I have it also, so anybody can reach out to me. So Jeremy said, what are your preferred methods of advertising for annuities and generating annuity leads?
Yeah, man. So I just threw my number back in there again. So I'm using a couple different things. So because we're always working leads, I have something called the Annuity Partnership Program. And what that is it's where agents find opportunity and they don't know how to close it. So we come in as an extension of their agency. We're actually doing this right now with a couple of our churros guys. And so they're getting leads, they're purchasing them. They're setting them, but they're not quite getting them across the line. And so we come in as an extension of your agency on a partnership program, and we help you close the business, and we split commission 50-50. So we work with a lot of agents doing that right now. But I'm also purchasing leads from Arturo. I'm purchasing leads from other vendors. In our training, we give you a lead breakdown of what you should buy when. So what I would tell you is if you're a brand new agent, you're just getting into annuities, you want to look at a low cost lead, right? You want to look at what's my lowest cost per acquisition lead, because the reality is one, if you're buying annuity leads, one, you should have the moving millions of minutes training. You just should, because getting the lead is just a portion of the battle. What do you do with the lead after that is what you need. And so you can either buy the training or partner with someone, anyone in the industry, but like myself, that will help you run and close business. But as a new agent, you have to realize you're going to get shot down a lot. You're going to get beat up a lot. And so you don't really want to be buying a $50 lead or a $100 lead if you're brand new. Now, if you've done $1 million or $2 million in sales, you have a good concept of annuities, then you're starting to say, okay, I'm looking for a more quality lead. That's where I would recommend Arturo to come in, because Arturo's leads are more quality. I like what he's doing. But like for a brand new person, again, I think you want to really get as many leads as fast as you can and build a callus and overcome obstacles before you dump a ton of money into more expensive leads. The big thing you have to realize is with those lower cost leads, guys, the intent isn't going to be there nearly as good, right? It's just not going to be as good. It's going to be harder to set. It's going to be harder to get a hold of them. Where when you start buying more quality leads, you're going to get higher rate of, like, I'll give you an example. And I know this is obviously Arturo's giving me this platform to talk to you guys, but one of the best things that I like in a lead is say the word annuity. Say annuity. Because a lot of these guys, and someone that you all probably know on here that, but there's another person that they try to hide the word annuity, and you're paying for high-end leads, but they're saying like safe investing, tax-free retirement, but they won't say annuity in the ad. And so you're kind of getting a bait and switch, where I like say annuity a lot, right? Say annuity. And so what we're focusing on specifically with Arturo right now is if you have a 401k from a previous employer and you want to roll it into an IRA, this is the steps. And then an FIA, a fixed index annuity, could be the best option for you. And so the lead campaign we're running with Arturo is specific. Like every person I get on, I don't have to say anything to them because they're calling me on moving their 401k to an annuity.
Yeah. And so to that point, like you can just see with your own two eyes here, which is Dan's on the call. So just so you can see, it's like, how much do you have? 200,000. How much do you have? 200,000. How much do you have? 200,000. How much do you have? 50 between 100. How much do you have? 200,000. Then you come over here and it says, do you have at least 100,000 or more in your retirement portfolio? 1, 2, 3, 4, 5, right? So again, like he's saying, if you count at the beginning, it's not cheap, but when you start looking at like what he's saying, if you want to be spinning your tires, right? If you want to cut your teeth, that's totally fine. The tint's not going to be there, but like specific targeting, again, this is saying that a cheap suit ain't good and a good suit ain't cheap. So you kind of got to find that fine line. And I'm sure Ryan can recommend some people who are kind of beginning, but if you've already had some experience, that's what this is for.
Well,
Educate people to go to that next level. And because the leads aren't cheap, you know what I mean? So if you don't want to be out there wasting a bunch of money on them. I think Roy said he was paying $400. And then it's on some sites, it's like $250 a lead. So you just want to make sure, you're not just getting all hyped up on adrenaline about making $90,000 or writing $750,000 in a day.
Yeah. Well, and that's what I was gonna hit too, is like, just the example of if you do buy a more expensive lead, I think you should, if you're newer, you should do it with the capacity that I'm going to partner with an industry leader, whether it doesn't matter who it is, just somebody that has been doing annuities for a while, because that way you can be like, if you fumble, then you say, all right, I have industry leader Ryan Kelly. He's a fiduciary. He wants to just talk to you about, what questions you have on this IRA rollover or 401k rollover. I'd love to set up a time for him. He works as an extension of our agency. And then on our side, we come in and we help close the business, right? You can do that with other people out there. There's other people that will help you if I'm sure in FFL, they got an FFL guy, right?
Yeah. Because that was the thing is for these leads too, that was one of the problems I needed to solve, which is why we had the agent accelerators. Like if we have these high intent leads and then people fumble them, right? Like that is not going to make them buy an order for me. So I'm like, okay, I need to find somebody that can help fail safe, which is like if Dan has these and he's like, okay, what do I do here? At worst case scenario, Ryan can help him, right, to make a few sales to recoup that so he doesn't fumble the bag with the qualities leads also. So it's just knowing the nuances and the prices. So that's one of the reasons why I started like partnering with Ryan on some of this stuff, was because I needed somebody that really did what they said too. I got to spend 3 or 4 months every single day, just me and him in the office. So I really got to know him. And we did, I mean, he really kind of sparked some of this stuff too, and getting it going. And I think over the last, I think it was February, since February, kind of really figuring out and getting that detailed targeting and spending thousands of bucks on it. So that's why I wanted him to be on here so you can hear from him. So in the event that anybody's trying to do this, he's also a resource for you guys.
Yeah, I want to answer a couple of these. So Dennis, I appreciate it. If you have questions on partnering, I'd be happy to do that. Someone on here said, would you recommend Theme for Income? I do recommend Theme for Income. So they have an income product that's pretty nice. It gives them, I want to say, a 12% ratchet every year for as long as they have the product until they elect income. I will say that depending on what the client's needs are, F&G has a very strong income product. The Allianz is a relatively strong income product. And so I need to know a little bit more about the client, but I do believe Athene's income product is very strong. Yeah.
Robert says, can you see that?
Yeah, I see two ask, kind of what our process is. So my process is call, Zoom. So I do everything virtually. I do some in appointment, but in person, but not much. So what we do is I have a setter. So I'm going to use Arturo for sake of him giving us this platform. So Arturo's leads come in. My setter sees them real time. We call them same day. My setter just calls and says, hey, we got your information. You're interested in moving a 401k to an IRA. I want to set you up with industry leader Ryan Chikelli. What times do you have available? Then they set. The reason I like having a setter, guys, is because it gives me a position of, I won't say power, but like I've been doing this a while. Like my assistant setting my appointments. I'm coming in on a higher level of knowing what I'm doing. And so my setter sets the appointments. I run the first call. So the first call, 15 to 20 minutes, never longer than 15 to 20 minutes. I just get to know why they reached out, what caught their attention, what their scenario is right now. Most of them, one that we just sold of Arturo's, had an old 401k at Voya, didn't know he could even move it. Didn't even know that was an option. And actually he filled out the lead to help us, or he filled out the lead to ask us if we could help him with his internal allocation. And I said, no, but I can show you a good plan to move it into another IRA and to get it outside of Voya. And so I take 15 to 20 minutes to get to know them and tell them about what's happening in the economy. And then I always set a Zoom up with them. And I try to do that within 48 to 72 hours. I don't like going over 72 hours. So call, Zoom. On the Zoom, they get to see me. Oh, in the meantime, after the call, I send them an info packet of who I am, how long I've been around. I've been very blessed in this industry to be in Forbes, MSN Money, Fox Business. So I send them some articles so they can get to know me and my team. And then on the call, I get to know their goals, what they're trying to achieve, what their retirement number is, are they nervous about risk? What other assets do they have outside of just this one 401k? And then at the end of that second appointment, but first Zoom, I asked for a copy of their statement so I can go and do my due diligence on their statement and come back to them with a solution. If they give you your statement, you're winning, right? If you get the statement on the call, then Zoom, you're winning. Some people are a little apprehensive. So they say, you know what, Ryan, I don't really want to give you my statement, but I'll share it with you on the screen and you can take some notes. So you can get a little creative so they're not sending it to you via email. Then I go back with my compliance and suitability team and just say, hey, this is the client scenario, this is age, this is how much money they have, what product works best for them. And then we get on the third appointment, second Zoom, and we present. We present something called our 3-bucket strategy, shows where they currently are, how they're following the rule of 100, and then where they should be based on the recommendations of the rule of 100. And we just outline that plan for them. Typically, if we get them to the end of the third, we give them the same thing, 24 to no longer than 72 hours to review it. And then that third Zoom, fourth appointment is intent to do application. And we say that on the third Zoom, like we get back on, I'm going to give you time to think about this. Our next step is to go through compliance and suitability. I'm the field underwriter. There is a compliance team at Athene or at, wherever you're working that has to review this on a compliance and state level. Once that approved, then we'll start the transfer process and I'll call. So, and then my assistant calls to welcome them to our team. And just says, if you need anything, my name's JC, get a hold of me. Ryan's in appointments all the time. Calls again, secondly, to say, hey, just want to let you know your case has been approved. We're now going to start transfers. Do you have any questions for Ryan? And then the third time is, hey, we received your transfers. Policy will be issued within 48 hours. Do you have any other questions for Ryan? The next step is setting up policy delivery. So we have a very, very, very polished system. For during COVID, guys, we knew we had to, I was in person only prior to COVID. And now I'm mainly virtually. Other than our exception in Nashville, we'll fill a room, every other month or so. But that's new. We didn't do that. We're just adding that in so we have more leads coming in. But that's our process. And I hate to beat it up, but like in our Moving Millions in Minutes training, we break all that down as well. We got any other questions?
Jerry, Chanel, Kirsten, Steve, it's good to see you. It's been a minute. Connor, what's up? Tyler, Ball Guy, you got any other questions? Anybody got any questions? Dempsey, you got any other questions? Jeremy, it's good to see you on. You got any other questions? Dan,
I got a question.
yes. Who's the Annalyn?
Yeah,
Yeah.
it's me. Okay, so you mentioned, Ryan, that you would work with us, partner with you. Tell us a little bit more about like how that works. Are you like doing splits? Are you taking on the transaction and we pass the ball, or are we able to shadow you? Like how does that kind of look like?
Yeah, absolutely. So it's a simple process. So what happens is we give you material that talks about who we are and how long we've been around. And let's just say that you have a client, that client you've had a call with, but you're not really getting anywhere. You just say, you know what? I have a gentleman named Ryan Chikelli. He's an extension of my agency. I would like to get him on a call with you and just go over your scenario and let Ryan take a look at it. So what we do is we always have you on the call because the goal is not to not teach you, right? Like I've done this well in my career by doing right for other people, and that's the clients and the agents, right? So one thing that we have, this might sound crazy for you guys, but to be a contracted agent with my team, you have to pay me $100,000. And so we have 4 contracted agents with our team. And the reason I did that is because, we have a high volume process. But 2 is I don't ever want any organization thinking I'm going to recruit agents. We don't recruit agents. We don't do contracting. And so what we do is we come in, we act as an extension of your team, and we complement everything that you do, right? So we're just, she's done very well helping you with your life, getting you set up with your life insurance. Now, as she's learning the index annuity space, we're mentoring her in that position. And so then we have you on, and what the goal is between 12 and 15 sales you want to have on. And what we do is we ask the client to record them for not only compliance, but training. And then we record all of them, and then you get them, I get them, and the client gets them. So again, it's for training and compliance. And we do between, again, 12 to 15 of them with you on a split basis. And as we continue to advance, we push you to do a little more. So we'll say, this time you're going to do the presentation on the 3 bucket strategy. And if you start fumbling, I'll step in, right? And so our goal is to get you doing it on your own. And then after the time you have it, you can say, all right, I'm going to go on my own and do this by myself. Or Ryan, we've had so much success working with you, we just want to keep working with you. It is a true 50-50 split. So this is one important thing. I have the back end team. So I have compliance, suitability, underwriters. I have a transfer team. I have all this. Our average annuity application to a commission time is 21 days, which if you know anything about annuities, that's super fast.
Yeah.
Yeah.
Hold on. Let's talk about that, because that was one of the issues that I was having, that most people were having, where it's like, I work with annuity agents, and the problem is it's taking them 60 plus days to do that. And you know me, I'm fast. So I'm like, all right, I need you to make some sales, get it through so you can buy some more leads from me, right? And I was like, okay, so we got to solve that problem too. It was one, fumbling the ball, and then two, getting it done properly. So when the very first thing I heard about you was coach saying this guy moves millions in minutes, and I was like, okay, so we got to talk. And so once I understood the annuity space, I'm like, perfect.
Yeah, and so so what happens is I do write it in my number, my license number. We can do two things. We can do a split with your writing number if your agency allows that. So what happens is we send it in. It's a 50-50 split between my agency writing number and your agent number. Most carriers allow that, no problem. If for some reason your upline doesn't like that, then we write it in-house here. My transfer team takes care of that, and then we issue you a check from my company for 50% of the commission, and we're very open about all of that. And we also have it, just so you guys know, if you have 10 or 15 agents, we do have override options. So if we close business with your agents, the agency still will override what their agents are doing. So we're very agency friendly.
Love that. Thank you.
Yeah.
Good stuff. Good stuff. Let's see. Dan, do you have something?
Yeah, I just hey Ryan, how are you?
Good, buddy.
I just on a quick note on these leads. I know you guys. It's when you think of buying expensive leads, you think of getting, okay, can I do this on the cheap? It's a nerve-wracking thing, you know. But I will tell you, as of last night, I got a call and I've signed up with Arturo's leads. I've jammed through as many as possible, and you go, okay, that guy's got no money. That guy's got no money. That guy's got no money. Well, come across 6:30 last night talking to Ray. He's got $900,000 sitting in Fidelity IRA,
Oh, I
a
love
pension of $80,000, 2,700 in Social Security, and his wife just died 2 years ago. Complete unexpectancy, and he's going to need income here in the next couple of years. He doesn't want to wait for it. Therefore, my question on a theme: do they have an income now, kind of like Phoenix had an income now and an income later product?
Yeah.
We'll go over that, Ryan, a thing. But this guy is just he's got no life insurance. I spent an hour with him only because it really got personal. Part of my family's got cancer. His wife died of cancer a year and a half ago. He goes, Dan, I've met with 3 other advisors and they all want to charge an annual fee of me. And I said, I understand that they got to make a living. I said, well, how much are they telling you to protect? The only thing I suggest to you at the primary moment in time is you put into an annuity, Ray, what you do not want to lose. End of story.
Yeah.
He says, let's talk further. I said, well, let me do me a favor. I want to get my associate, Ryan. I think 2 brains are better than 1. Are you available in the next few days? He says, please get him available. So we got an appointment coming up for about $900,000.
Yeah, that's awesome, man. That's awesome. And I'm excited to see how that pans out. So yeah, there's a ton of companies out there that offer it. Obviously, you know, the Phoenix, the income today and income tomorrow, that was a strong product, right? And so
I mean, I'm not new to the game. I get the stuff, but you know, what's as entering again and getting back in it, I definitely need you as a backup. Want to have there's no problem. I think it's an incredible investment to do that and split something and have a, you know, current professional on this stuff and get going, and nothing wrong with that. It's an amazing opportunity you're giving us. So.
Yeah, no, I appreciate it. I'm excited to partner with you and reach out to me, and we'll go through it and get it done. One of the things I want to talk about is expectation real quick, because I know we're probably wrapping up here pretty quick. Expectations on leads. So what I tell folks, and I hold Arturo to this standard, is when I'm paying for a quality lead, like a decent lead, I expect a couple things. 1, the number to work, which Arturo agrees in. 2, I do expect around a 40 to 50% set rate. 60% is kind of high. 40 to 50 is where they should be falling in for set rate. And then out of that set rate, you should be advancing on appointments of roughly 50% and then closing roughly 50%. So just an example, on Arturo's leads, I believe, and Arturo, you can correct me if I'm wrong, I believe we got 45 relatively quick. On those 45, we did set about 40% of them. On the 40%, we moved through applications with roughly 50% of those. We've closed 3 just on the lead so far. 3 are closed. Roughly we had a day that we did 750,000. Roughly 600,000 of the 750 were leads from Arturo. And so the idea is there's a lot of agents that are out there that will be like, man, I bought 50 leads and I'm working 10 of them. guys, it takes one to pay for the month. And so just kind of keep that in mind, because agents can get frustrated with that. If your lead set is above 40%, that's a key indicator for me. So just I wanted to throw that out there. So like a 70% set rate is pretty unrealistic, right? But the other thing we did that was really important, and if you're working with Arturo, is get your Calendarly set up on the lead intake. So I probably had 7 self books, which 5 of them actually showed up, 2 of them ghosted me. But that auto book on the Calendarly, when they click on the lead to auto book with you, super powerful. So if you don't have a Calendarly link set up, you know, for the sake of your conversion, because the lead vendor can do so much, but you can do some too, right? And so maybe a bio about you, how long you've been in the industry. What I have with Zapier is when Arturo sends a lead in and my setter sets the appointment, Zapier instantly sends them an about us packet, which I'll, you know, I mean, I can share with you guys. And it just tells them about us, our agency, how long we've been around. So because in the virtual world, you have to build as much credibility as quickly as possible, or you're going to lose to someone else. And luck, you know, on my end, I'm leaning on my 16 years of experience in doing this. Sometimes you guys don't have that. And so that's where like partnering with someone that does have it really helps, because you're battling against, you know, I say Edward Jones is the Burger King of investing. They're everywhere. You can walk in. They don't care about where your money's at, what your goals are. You'll leave without your money within an hour. Where we sit down, get to know you, we come up with a plan. We do a lot of back end due diligence before we work with you. And so the idea there is just like these guys that are in their local towns, they'll take their money while you're trying to do the right thing for the client. So you have to build as much credibility with them as possible. So that way, you know, the client feels comfortable with you. What do you use in your info pack? Anything specific? I use a ton of stuff about me, my agency, how long I've been around. I can, again, shoot me a message, guys, via text or email, and reach out to Arturo to get my contact info. If you don't have it from here, I'll be happy to send you all of what we're doing. It's all compliant, it's all vetted. You know, again, because I've been doing this a while, I own the annuity expert, I own the safe investing expert, and I own the 401k rollover expert. And so those are my domains. We're advertising to them. And so we have, you know, again, acting as an extension of your agency, we have a really good foundation to be like, look at us. We've been around for a long time, and we work with a lot of clients. And you guys will have that too in time, right? I've been doing this 16 years. This is not a overnight success bullshit. You know what I mean? It's not one of those things.
Dope, dope, dope. Let's see. Last call for questions. Let's see. Got on late. What does it say? Yeah, it's in the chat. Oh, you can't see it. I'll drop it in there. Again, got the last question. Who wants to be the last one to ask a question? Joseph, you staring intently. You got any questions? Chanel, what's up? You got any questions? Nope. Dr. Janet, what's up? Jared, you got anything? I know you're doing multiple things at once.
I like Jack put on here whale hunting season. I saw that a second. I like that.
Yeah, for
AEP,
sure.
man. AEP is, if you guys if you've ever been on the edge to get into annuities, AEP, man, is where like you're going to be busy. It is the time. People are mentally programmed to be reviewing their investments, Medicare, everything right now. And so you couldn't be coming into this at a better time.
For sure. Well, obviously, this is something where Ryan's on here. He's moving millions in minutes. And so we took up 60 of them. So can you guys do me a favor and drop a 7 in the chat if this was valuable for you guys, just to show him some love, because this is absolutely amazing to get on here. And obviously, hopefully, it's good to see some of you guys as a resource to like show you guys what's possible. And then just getting around some other people, talking about some different things. I know you guys get tired of beating up the same thing. So, it's easy to find Ryan Kelly. It's easy to find me. So if you guys have any questions, Rick, what's up, man? Good to see you on. Steve, it's good to see you. Some of you guys I hadn't seen in a minute. But if you guys have any other questions about any of this stuff, you can reach out to me. You can reach out to Jack or reach out to Ryan if you guys are looking for some help with some cases that you guys have. And again, I'm only bringing people to you that, that are credible, that I feel like do what's in the best interest of the client, because that's what's most important here. So hopefully this was valuable for you guys. Tony, it's good to see you. Randy, if nobody else has any questions, that'll do it, man. Hey, Ryan, thanks again, man. This was absolutely amazing. Definitely appreciate it for sure.
Yeah. We'll see
Awesome.
you.
Hey guys, take care.